think now dah boleh ya. So I'm going to present. Can you hear me?
Yes, madam.
Yes, madam.
All right. Okay, so okay. Right. So yeah, let's go through the question first. Yeah. All right. This is the common test question last semester. Okay, look at question number 1. Yeah. Copyrights, trademarks, franchises, and licenses are examples of intangible assets which are defined as non-monetary in nature without physical substance. Now, briefly explain the recognition criteria of an intangible asset according to MFRS 138. Okay, this one is very easy. You can get the answer directly. Okay, the identifiable control, feature benefits, and so on. Then we move on to part B. Now, in January 2020, Kopi Cafe acquired a franchise to operate Mr. Kopi Tarik kiosk for 50,000. The franchise will last for 8 years. All right, and upon acquisition of the franchise, the following costs were incurred. Okay, so we have to calculate what is the cost of the franchise. All right, so this is the purchase price. Okay, 50,000 is the purchase price, and on top of that, we have to identify what are the directly attributable costs to acquire the franchise. Okay, training cost. Training cost is not included. All right, this one should be expense. Legal cost to register the franchise. Yes, yeah, registration fee. Okay, the legal cost incurred. This one is included. The salary to the staff. Okay, so salaries to the staff. This one should be included. All right, this is part of your administration. Okay. Now, Kopi also announced that the sales for its product have grown steadily throughout 2019. The company claimed that its good name had contributed to the tremendous increase in sales and wishes to incorporate this good name as a goodwill. So he wants to, the owner wants to recognize the internally generated goodwill, all right? Because he feels that the business actually has a goodwill in terms of good name, the reputation, which gives rise to the increase in the future benefits. All right, so let's look at the question. Explain the accounting treatment according to the situation above for the year ended the 31st of December 2020. So when you see this here for the year ended, all right, for the year ended, okay, when you see for the year ended, what does it mean? Okay, it means that you have to explain the accounting treatment from the beginning, okay, from January, all right, until the end of the year. Okay, that is the meaning for the year ended. So we look at franchise, all right, the franchise from the date of acquisition, you account for the franchise. So just as acquired as so acquired will be recognized in the book as an asset, and we will measure the initial cost. So what is the cost? So you're given not just the purchase price, but also the directly attributable cost. Next, we look at the useful life. So in this case, a finite life. So therefore, you need to provide amortization at the end of this year. How do you recognize that? Okay, the amortization expense will go to the software. Okay. And what about the other costs, meaning the training costs and the sales of the salaries? Now, of course, that will be expensive. for the goodwill, all right, it's internally generated, so this 30,000 cannot be recognized. They cannot recognize that figure in its book. Okay, so let's take a look at the solution. Right, so this is the solution. Okay. Franchise acquired on 1st January 2020 are recognized as an intangible asset in accordance. So you have to state the standard. All right, you have to state the standard. Okay, MFRS 138 intangible asset, because you have to explain why you recognize it as your intangible asset. Yeah, because it meets the recognition criteria of identifiable, control over resources, future economic benefits, and you can also measure the cost, yeah, which is at 56,800. Since the franchise will last for 8 years, amortization expense, so you show how much, yeah, show your calculation and charge it to the SOFO for the year ended December 20. Okay, for the other costs, training, and also the salaries of the staff, okay, make sure you put the figures there. They are not being recognized, okay, as I said, but rather expense to the SOFO. The goodwill, the internally generated goodwill is prohibited from being recognized as an intangible asset because we cannot distinguish it separately from the business as a whole. So there is no need for us to recognize it at all. Okay. All right. So I hope you'll take down the solution. Okay. Right. Now, next one, C. In January 2016, WinCup Research and Development Team embarked on a new project. The team came up with a new product named Slush Cup, which can maintain the coldest of drink for 24 hours. And they had incurred 250,000 for the research activities. Researchers were able to demonstrate the technical feasibility to complete and sell the product in January 2017. Okay. In total, Win had incurred 440,000 for the development activities, including 17,000 for staff training in 2017. Commercial production began in 2018, and the product is expected to bring economic benefit for 6 years. Okay. Amortization for the development cost is on a straight line yearly basis. Okay, some of the words that you have to, let me see if I can. Cannot, yeah. Okay. I cannot write any comments. Okay. All right. So unfortunately, on 31st December 2020, Arrival came up with cheaper substitute product, and the revised present value of the future estimated cash flow declined to 125. Okay, so we see the element of capitalization, okay, and then we see the element of impairment here, all right, being tested for this part C. Okay, so the question, okay, there are 3 parts to the question. Explain the accounting treatment for the year ended 31st December 2016, December 17, December 18 for the cost of R&D incurred above. Okay, so let's see what happened in 2016. All right, 2016, okay, they come up with and maintain it, and then they incurred 250 for research. So in 2016, research, remember, yeah, all research costs you must write off. Okay, so this one will be written off. Okay, and then we look at 2017, the researchers were able to demonstrate technical feasibility to complete the product in January 2017. They even incur training costs. This 440,000 is in fact included the 17. Yeah? So you have to take out the training cost from the 440. The balance is the development cost, and you know, we can capitalize. All right, we can capitalize. Okay, why? All right, so they give you just one of the reason here. It demonstrates technical feasibility to complete and sell the product. And then you see here in January 18, they actually start commercial production. So this information actually tells you that the development activity, okay, was a success and that it meets the capitalization criteria. So you will capitalize, okay, the development cost incurred in 2017, except for the staff training, okay. All right, then it says 31st December 18. Now what happened in December 18? December 18, they already produced the product, and the product is going to last, okay, or bring future benefit for 6 years. That's the finite life, okay. So meaning to say, we know that the product resulting from the development is going to last 6 years. So the development cost that you have capitalized here, all right, the development cost you have capitalized earlier on will be amortized. All right, so you will start amortization in 2018 for over a period of 6 years. Okay, so 440 you minus 17. Okay, 440 minus 17 you divide by 6. Amortization expense will be 70,500 in the year 2018. All right, so what I want to emphasize here is that, okay, you see when are the stages, yeah? Okay, so development phase, when the development is a success, all right, you will capitalize the development cost. Okay, once commercial production begin, you stop your capitalization. When you start amortize, you start amortize, all right, after commercial production, provided you know the useful life is finite. Okay, right? So that is how we deal with research and development costs. Okay. All right. So that is for this period. Yeah. Next, calculate the impairment loss for 2020. So you can see here. Okay, the rival came and sold the value in use, present value of future economic benefit here is the value in use, is now 125. So impairment, what do you do? We compare this recoverable amount with the carrying amount of our development cost. Okay, so how many years have we amortized the development cost? So 2018, 2019, 23 years, yeah? So you calculate the accumulated amortization of your development cost for 3 years, you minus with the development cost that you have capitalized, and you compare to this. All right. Now, if the carrying amount is higher than the value in use or the recoverable amount, then there will be an impairment. Okay. And the third part is prepare journal entries to record the impairment loss. Okay. So you go back to the method, yeah, you measure this development cost. Is it the cost model? Is it the revaluation model? Okay, so if it is the cost model, then of course the impairment loss will be debited directly to the software. But if it is a revaluation model, you have to see whether this asset had been revalued before and there is a surplus, and so impairment loss you must charge against the previous surplus. All right, okay, so let's take a look at the solution. Okay, so for 2016, yeah, according to MFRS 138, intangible asset, the research cost of 250. Okay, so see how you answer the question, yeah? All right, the research cost of, you must give the figure. All right, don't leave out the figure if it is given in the question, okay? Incurred shall be expense to the software. All right. Now, one thing that is missing in the solution here is that, okay, it's good that you include why do you write it off. Okay, so I need you to add on another statement here. Okay, it's expense to the software because there is no probable future economic benefits derived from this research cost. Okay, add in your reasons. Yeah. Okay, the next one, 2017. On 1st January 2017, the development cost shall be recognized as intangible asset because the company can demonstrate the technical feasibility to complete the R&D project and the ability to sell the product. So the cost to be capitalized is, so show your working here, 440 minus 70, 423,000. And the staff training cost of 17,000 will be expensed to the SOFL. Okay, so this is the accounting treatment and why do you account it as your asset. Okay, and December 18, production began in January 18. Development costs will be amortized, okay, over useful life of 6 years, and which will be charged to the SOFL. Okay, so this is on accounting treatment. All right, so learn how to answer a question relating to accounting treatment. There is always a rule as to how you answer it. All right, so if you know those rules, okay, to follow, all right, then you won't have any problem at answering this kind of question. Okay, right? And then look at where the marks are allocated. All right, for every points that you put here, the important points, there will be marks given. Okay. Right, then we go to the calculation of the impairment loss. Okay. So, like I said, we calculate the carrying amount, okay, of the development cost on the year, on the date of the impairment, which is the cost minus the accumulated amortization for 3 years. So its carrying amount is 211,500. The recoverable amount is only 125. So there is an impairment loss of 86,500, and it will be debited to the SOFL. Okay, and credit your accumulated impairment loss, or you can credit your development cost. Okay, all right, either accumulated or the intangible asset itself. Right, so that is for test last semester. Do you have any question before I move on? Very clear. How is your solution? How is your answer? Is it something close to this? Yes. All right. Okay, that's good. Okay, so you have that same answer. That means you are on the right track. Okay. Right. Now let's move on to the next one. Okay, we look at final exam now. Okay, there are two. One is the final exam last sem, and this one is the supplementary exam. Okay, let's have a look. Okay. Okay, so this was last semester question. All right, let's look at question number 2. Okay, part A, list 2 examples of market-related intangible assets. All right, so you can find this in your textbook. Okay, market-related intangible assets, or you can Google, dalam internet. All right, there are answers from on market-related intangible assets. Okay, so we move on to part B. Okay, so like I said, there are several kinds of intangible assets related to market, related to IT, related to, what else? Okay, broadcasting and things like that. All right, so you can Google that. Okay? You can get all the answers from there. It's all in the textbook as well. Okay, let's look at B. Hashi has been involved in developing a new brand of health product to enhance vibrance and immune system. The following research and development expenditure has been incurred, right? Okay, so stage 1, research stage, 1 million, and then in 2019 and 20 is the development stage, stage 1 and 2. Now, the cost incurred in the year 2018 was aimed to discover a new formula to develop the new product. So, of course, this one will be written off. Okay, you will write this off. Okay. Now, the next one, the development stage from 1st of January until 31st of December included market testing and the promotion of 50,000. However, the development costs incurred at this stage could not provide convincing evidence that the economic benefit of the project would flow to the company. So even though this is the development stage, right? Okay, but because it does not meet the capitalization criteria, it's mentioned here, not giving convincing evidence of future benefits. So what we do with the development cost in the first stage, you're going to write it off. Okay, but you have to be careful. Out of this 2 million, okay, market testing and promotion here is not under development stage. Okay, this falls under your sales and distribution expenses. All right, no doubt they are also written off here together with the development cost. Okay, next one. Further improvement was needed before the product could be accepted by the market. Okay, so they move on to the next stage where they develop the product further. So the next development stage was finally completed on 30th of June 2020. The details of the cost incurred were, okay, so if we add all these figures, right, 1,000,005, okay, plus 200 plus 120 plus 110, yeah, this whole figure here, okay, is equal to 1,930,000. So this one actually give you the breakdown of this figure. All right, so what are the items, salaries and wages of the staff involved in the project? So definitely it falls under development. Okay, materials consumed to conduct clinical testing of the product, it's part of development. Rental of special equipment, okay, you have to pay rental, all right, in order to acquire this equipment, okay, all right, because you need this special equipment for your R&D, so you pay rental. So the rental, okay, the rental that you pay will be included under development. Okay, depreciation on machine used in the lab. Okay, machine itself is a PPE. What is included in the development is the depreciation. Alright, so sama lah accounting treatment dengan equipment tadi. Equipment, the cost of the equipment is under PPE, but what is included, okay, will be the depreciation or whatever, yeah. Alright, the cost will be capitalized. Alright, if it is if let's say the equipment is under a finance lease. Okay, now general and administrative, this one is general expenses. That means it's used for the business as a whole. So of course this one should not be included. Okay, so from 1st of January 2020 until 30th of June, the project was viewed as successful and they expect to commercialize it by the end of July. So right after this, okay, end of June, the development activity will cease, yeah, because it is finally completed and they plan to commercialize it the next month. Okay, so definitely we will need to capitalize. Yeah, so let's look at number 1. Explain the accounting treatment for the R&D for the period 18 and 19 and prepare journal entries for the development costs incurred in 2020. Okay, so you look at the type of questions that they can, from one set of a question, they can ask you several ways. Okay, they can ask for accounting treatment, they can ask for journal entries, they can ask for preparation of the financial statements. Okay, so let's look at the solution. Right. So these are the intangible assets that will fall under market related. Okay, let's go to B now. So in 2018, the research cost of 1 million incurred should be recognized as expense to the software media incurred since, see there is a reason there, no probability that the benefit will go to the entity. So there is a mark given when you give the explanation. Okay, right? Then in 2019, the development cost of 1.5 million incurred did not provide convincing evidence that it will flow to the company. Okay, which means that the capitalization criteria is not met. Therefore, the development cost, okay, and the market testing and promotion cost should be expensed. Let me see, did I read it correctly or not? Included 2019, the development in 2019, yeah, 2 million up. Yeah, okay. So 2 million we minus 50, that's 1950. Okay. All right. So the development cost itself, yeah, is 1950, which means 2 million minus 50 tadi, okay, will be expense. Okay. Whereas the 50,000, which is the market promotion cost, yeah, it should also be expense to the software media incurred. But this one will fall under your sales and distribution, right? Market testing and promotion. Okay. All right. Now let's take a look at the journal entry in 2020. Okay, bear in mind in 2020 we capitalize. Okay, so we debit the intangible asset development cost. Okay, the figure is 1820. Right? Why 1820? Okay, because we include. Okay, we include. All right, this one, and this one only. Okay, all right. So that's how we get that figure. Okay, so look at what we credit. The account credited are, you see, if it is a depreciation, right? Depreciation on the machine, we debit the depreciation to your development cost, and we credit the accumulated depreciation, right? We do not credit it in our cash because we don't pay for the depreciation, right? It's a non-cash item. Okay, so look at the double entry here. Okay, so anytime you see amortization of intangibles or depreciation of PPE, okay, make sure that the credit account is the accumulated amortization or accumulated depreciation. Okay, and the rest, yeah, you will credit it to your cash, bank, or payables. Right? Okay, then part C. Okay, let's look at part C. In January 2015, Tadika Bersinar acquired an education franchise at the cost of 100,000. With the estimated economic life of 10 years, they adopt revaluation model for the subsequent measurement of the intangible assets. In January 18 and January 20, the fair values of the education franchise were 77,000 and 53,000 respectively. So you are to calculate, all right, any surplus or deficit on revaluation for this franchise for these 2 years. Okay, so let's take a look at the solution. Yeah. Okay, so for 2018, all right, if you want to determine the surplus or deficit, you compare the carrying amount. Okay, so the first step is you calculate the carrying amount. Okay, so calculation of the carrying amount will be the cost of the franchise minus the accumulated amortization for 3 years. Okay, 3 years. Right? Okay, so you get the carrying amount 70, then next step, Okay, it's your fair value. Okay, then you compare. So since the fair value is higher than the carrying amount, you have to increase this carrying amount. All right, so increase in the carrying amount is called the surplus. Okay, surplus of 7,000. Right? Okay, and then in 2020, a subsequent revaluation. Okay, so this is your first revaluation, right? See, okay. Okay. So this one, okay. So this is the first revaluation. This is the second revaluation. All right. So let's see what happened in the second revaluation. So again, we calculate the carrying amount on 1st January 20. Okay, how do you calculate the carrying, the accumulated, sorry, the amortization, okay, after the first revaluation? So we will calculate it by taking this one. We take the fair value here, yeah, 77. We divide by the remaining useful life, okay? This one is the remaining useful life. The useful life was 10 years. We already amortized 3 years, so you have 7 years, okay? Right, in the next accounting year. Okay, and you have from 2018 to January 22 years. You have already used up the asset, so the accumulated amortization after revaluation is 22,000 minus the revalued amount. Okay, so you have 55,000 as the carrying amount on January 1st, 2020. Right? Okay, then you compare that to the fair value, let's see. Okay, something is missing there. All right. So what is the fair value? It's 53. Okay. So compare that here. Okay, one thing is missing here, fair value. The fair value is 53. So you can see that the fair value is lower than the carrying amount. So you need to reduce this carrying amount. So what you reduce is called the deficit. So you have a deficit of 2,000. Okay. So how do you account for the deficit? Let's say if you are asked to prepare a journal entry, how do you account for the deficit? So in the second revaluation, you are going to credit, okay, because you're going to reduce the carrying amount of your franchise, so you're going to credit your IA, all right, by 2,000. But the account you're going to debit is not the SOFR. Yeah? Why? Because previously you had a surplus here. So you're going to debit your asset evaluation. How much is your deficit? It's only 2K. So you still have a balance in your surplus here. Minus 2, you still have another 5K. All right, so this 5K will be shown in your statement of financial position on 31st December 20. Okay, you still have a balance of your revaluation reserve of 5,000. All right, so that is the accounting treatment for the deficit subsequent revaluation if previously you had a surplus. Okay, all right. Now, any questions so far? Anyone wants still not clear? Okay, you take a look at your own answers now, okay, and then you compare with this. If there's anything that you are not clear, still want further explanation, just let me know. Part B, okay?
Okay, madam.
Okay, B1 and B2, okay? All right. What
C,
about C?
madam. The
C. What is your
surplus,
issue here?
the second
The
one,
surplus
the second
why?
part. Yeah.
This one, the treatment for the second revaluation, is it?
Yes. I don't really get it.
Okay.
How to get that one?
How to get what? Which one?
How to get the second
How to get this
revelation?
figure?
Yeah.
How to get the 2000, is it?
Yes. Yes, madam.
Okay, how to get the 2000? All right, let me go back to the question. Okay, so here in this question, okay, in this question, yeah, we have two revaluation taking place. Okay, the first revaluation took place here on 1st of January 18. All right, the next revaluation took place on 1st of January 20. Okay, so what do we do on this date? We will compare the carrying amount with the fair value. Okay, so when we compared earlier on, yeah, we found that the fair value was higher. So when it's higher, you have to increase this carrying amount by how much? You have to increase it by this figure. All right, okay, by 7. Okay, so we have to increase that by 7. So that 7 is your surplus. Okay, on revaluation. So what was the journal entry? So you will debit your IA, right? You increase your asset, and then you will credit your asset revaluation reserve. Okay, so that will happen in this year. Okay, so on 31st of December 18, okay, in your statement of financial position, right, you will show your asset revaluation 7,000. Okay, until the next revaluation. So that means until the next year here, 2020, you will carry forward this revaluation reserve. Okay, for this intangible asset. Okay, now on this date, you revalue it again. Okay, so when you value, the fair value is 53, but you have to compare with the carrying amount. So how much was the asset that you carried up to here? So how do we calculate the carrying amount? So the carrying amount, right, on 1st January 20 will be no longer the cost, right? Because we have already increased your asset to reflect this fair value. So it will be the fair value, okay, which is 77. Okay, but you continue to depreciate, you continue to amortize your intangible asset. Okay, continue to amortize it because it has a useful life. Okay, a balance of another 7 years, right? Because after you revalue here, okay, your asset has a remaining life of 7 years. So you minus the accumulated amortization. Now the point is, how do you calculate the amortization for 1 year? So you take the fair value, right, which is 77, okay, and you divide by the remaining useful life. So the remaining useful life, like I said earlier on, is okay, 2015 to 2018. You have used it for 15, 16, 17. Yeah? Okay, 3 years. So 10 minus 3, remaining life is 7. So the amortization expense per year, all right, after this date, yes, lepas tarikh ni, amortization berubah. Okay, now is 11,000. Okay, per year. All right. So how many years? So 11,000 multiplied by how many years from here to here? So 18, 19, 2 years. Okay, so that's 22. Okay, 22. So you have a carrying amount of 55. Right? So that's the carrying amount of the asset here. So you compare the carrying amount 55 to the new fair value of 53. Okay, so what do you notice here? You see the fair value is only 53, so you have to reduce this one. Okay, this figure need to be reduced. So what you reduce here, all right, is the deficit. So let me remove this one first. Okay, right? So what we reduce here, okay, when we reduce our asset, okay, that means we recognize that there is a deficit on the valuation of 2,000, right? So in this year it's a deficit, but previous year, remember, we bring this to this period, we still have a surplus. So how do we account for that deficit? Okay, deficit means you reduce this carrying amount. So meaning you still have to credit your IA, okay, by this figure, but what would you debit? Even though it's a deficit, you cannot debit SOPL. Okay, you cannot do that. Why? Because previously you have a surplus. So you have to make use of the surplus because it relates to the same asset. So you will debit the asset evaluation. Okay, you have 7, but you don't need to use all the 7 because your deficit is only 2. So you debit 2. Right? So by the end of this year, okay, 31st of December 2020, in your statement of financial position, your asset revaluation reserve remain is 5. Okay, 5 million. Okay, we forget about the realization of the amortization, okay, expense. All right, due to the amortization, yeah, we forget about that. We ignore. Okay, so that is why the figure here is 5. In fact, it should be lower. Okay, but we ignore the realization of the amortization expense as the asset is amortized. Okay, so this is how we account for the asset, yeah, for the valuation. All right, is that clear? Whoever is asking me this now,
Yeah, clear, madam. Thank you,
are you
madam.
clear? Are you clear?
Yes, yes, I'm clear with it now. Thank you, madam.
All right. Okay. All right. What about the rest of you?
Clear.
Okay. Yeah. Okay, so we move on. Yeah, we go to the next question. All right, the next question is the special exam. Okay, it's the sub exam question. Okay. Okay, so let's look at, all right, question number 2. Okay, state 2 criteria where development costs may qualify as a recognized intangible assets. Okay, state any 2. Right? Okay, B. Let's look at B. Now, Use Beauty is a company that is involved in producing slimming products in Kelantan. The company is actively conducting R&D activities in introducing a new product for the Malaysian market. The company completed an R&D activity and introduced a new slimming supplement product branded as soy protein recently. R&D activity started on 1st January 19 and completed on 30th October 19. Management were confident that the development activities would be a success starting on 1st of April 19. Okay, so what we have here is All right. So what we have here is R&D started 1st Jan 19. Okay. And complete on 1st October 19. Okay. So they are confident that on 1st of April. Okay. So you can see there is a from here to here. All right. Commercial production would commence on 1st of November. So you have production begin after. Okay. So the company incurred 1 million for R&D costs, where 25% of it attribute to research activities. Included in the development cost was 100 for scientist salaries and 150 for marketing and advertising. Right? It was expected that the benefit derived would last for 10 years. This is the useful life. Okay. So after production, the product comes out will last for 10 years. Now, during the year ended 31st December 20, the management decided to revalue all its intangible assets. The fair value of the development cost on 31st of December 2020. Okay, so 2020, okay, you have the fair value amounting to 500,000. The company adopted revaluation model for the intangible and amortization based on daily basis. Okay, so the time period. Okay. Now, question on the accounting treatment for this for the year 2019 and 2020. Right. So you will have to look at each of the year. What happened in 2019? Discuss what happened in 2020. Okay. Right. So there are a few things taking place here. One is the research. How do you deal with the research? Why do you deal with it that way? Okay, the second part is the development cost. Okay, and we know that the development, okay, is a success because in the next after 1st of October, okay, they have decided they have commercially produced the product. Okay, so you will definitely got to capitalize the development cost. Okay, and then you take out what is not under development cost, which is marketing and advertising. Right? So that is for until October 19. Okay, and then after 1st October 19, how are you going to deal with the development cost? Okay, of course you will have to start with the amortization. All right, start with amortization because the product that is produced, okay, has a finite useful life of 10 years. Okay. Then you talk about revaluation. So of course, when you revalue, you have to compare fair value to the carrying amount. How do you calculate the carrying amount? It will be the cost minus the accumulated amortization. All right. So you have to incorporate all that in your answers. Okay. So let's take a look at the solution. Okay. So you can see here research cost of 250. All right, research cost of 250. Okay, let's put these two together. Open. Okay, never mind. Okay. Why can't I open both side by side? Okay, never mind. All right, so the research cost of 25%. So go back to the question again, yeah? Okay, it says here that company incurred, this is the total R&D. Okay, this is the total. 25% of this is your research now. So that's why in your answer here, okay, the figure is 250,000. This will be expense to the SOPL. All right. Okay. Now I always want to advise students, every time you have your answers, okay, even though dalam suggested solution macam ni, it did not mention why you write it off, please add it on, okay? Because sometimes there will be marks given. It depends on the examiner, okay, the person who prepared the solution. So to be on the safe side, all right, just add research cost of 250 is expense off to the software because the research cost does not bring probable future benefit, or there is uncertainty in the future benefit. I just say like that, okay? Next, the development cost will be recognized as intangible asset at the initial cost of 600,000. So make sure you take out, okay? Take out all those expenditures that is not related to development, right? As management will confident the development activities will be a success. So the development cost is completed on 30th October 2019. Then it will be amortized, all right, because of the finite life, 10 years. Okay, so on 31st of December 19 and 20, the amortization expense was 60,000, okay, which is 600 here divided by 10, 60,000, written off to the software. Okay, so make sure that when you mention about amortization expense, the figure, okay, you must mention about writing off to the software. Okay, so as at 31st of December 2019, the carrying value is 540,000. All right, which means the cost minus the amortization expense. Okay, notice that the calculation of the amortization expense, we give it a full year, because it's yearly basis. Tapi dalam exam, sekiranya exam question is silent, alright, is silent. Okay, dia tak sebut yearly basis, dia tak sebut. Then you must make sure that you use monthly basis. Okay, that is if the question is silent. So make sure that you calculate on the monthly basis. Okay, but sometimes the examiner would like to make it clear to the students, so dia akan sebut yearly basis or monthly basis. Tapi kalau dia silent, make sure you use monthly basis. Alright? Okay, please remember, please take note. Okay. So the amortization is 60, therefore the carrying amount is 540,000 at the end of this year. Okay. The carrying value of the development cost on 31st of December 2020 will be 600 minus, okay, amortization expense for 2 years, 120. So it's 480,000. And on this year, okay, or on this date, you are going to revalue your development cost. The fair value of the development cost was 500,000. So since the carrying amount is lower, all right, we have to increase this carrying amount by 20,000, and that is called the surplus. Okay, so it results in a surplus on revaluation 20,000, which will be credited to asset revaluation reserve. All right. So the accumulated amortization of 120 will be eliminated, and the new carrying amount of the development cost will of course be the fair value. So you see the the accounting treatment is the same as your accounting treatment for PPE. All right, when you revalue your PPE, okay, all the previous accumulated depreciation will be written off, will be eliminated. Okay, and your asset, okay, will be carried at the new fair value. Okay, all right. So what you can do is, this one answer is more long sekali, but what you can do is you can also split your answer, okay, into the accounting period. So you can talk about what happened on 31st December 19. Okay, you just mentioned, all right, about your research cost, and then your development cost, and then about the amortization. Okay. right? And then you can talk about 31st of December 20. What happened 31st December 20? Okay, you amortize, right? You continue to amortize for 1 year. Okay, and after that, we talk about revaluation. Okay, all right, let's make your answer like this. Okay, so the task for the okay, if you want, you can explain based on accounting period, right? So you see this one, this information that is given here, this information is the same as how you account for your PPE. Okay, that is revalued. Okay, the accumulated amortization. In the case of PPE, the accumulated depreciation is eliminated. All right, and your asset will be carried at the new carrying amount, which is the fair value. Okay, so this is the same. Okay, now for those of you who have done MFRS 116, for some of you who are still doing it 270 this semester, okay, you will see the accounting treatment is the same, right? Okay, then we go to the next part. C. AI involved in the manufacture of computer artificial intelligence. The company acquired well-known software to produce some of the educational software for kids in kindergarten. The software mentioned above represented the company's intangible asset that was purchased on 1st of January 18 at a total cost of 600,000. The asset was amortized over 5 years and the company adopted revaluation. So again, the testing candidates on this model, the revaluation model. In 2020, due to technological advancement, the software became outdated. So once it's become outdated, there is definitely going to be an impairment. All right, impairment. So on 31st December, the value in use, okay, and the fair value less cost to sell. So when they give you this figure, this is for you to compute the recoverable amount, yeah, the RA, the recoverable amount. So you are to choose the higher of this, higher of this and this, right, to represent the RA for impairment purposes, right? So in this part of the question, they test student evaluation and impairment at the same time. So number 1, calculate the impairment loss if any. Number 2, prepare the statement of profit or loss for the year ended 2020 and the statement of financial position. Now this part they're testing you on disclosure. Okay, disclosure, right? How would you disclose? What would you disclose in these two statements? Okay. All right. So let's move on to the solution. Yeah. Okay. So check out your own answers. Okay. See if you get it correct. Yeah. The calculation. All right. So we are going to calculate. Okay. Whether there is impairment loss on this date. So definitely we need to get the carrying amount. Okay. So how do we get the carrying amount? So we start with the 600 here. What is this 600? Let me go back there again. Okay, that is the cost, yeah, 600. All right, that is the cost of the software. And then we minus the amortization per year, okay, which is 5 years. So divide 600 divided by 5. All right, and from the date you first acquire till end of this year is 3 years. Okay, so accumulated amount is 360. So that gives you a carrying amount of 240,000. Okay, so next we compare, all right, the recoverable amount. Okay, we take the higher of the two figures. So the higher figure is 235. What is 235? That is the fair value less cost to sell. So that represents the RA. Okay, so how do we know your asset is impaired? Okay, there is an impairment only, okay, if and only carrying value more than recoverable amount. All right, if and only carrying amount more than recoverable amount, then you have an impairment. Okay, so the carrying amount is higher, 240, the recoverable is less, 23. So there is an impairment of 500, right? So there is an impairment loss. Okay, remember that, yeah? If and only carrying amount more than recoverable, then you have an impairment loss. Otherwise, you don't need to recognize any impairment loss, and then you can continue to recognize the asset, okay, at its cost minus the accumulated amortization. But once your asset is impaired, all right, what will be the new value after impairment? This will be the new carrying amount of the asset after impairment. Okay, right? So let's look at the statement of profit or loss. In your statement of profit or loss, will be your expenses. What are your expenses? Your amortization expense. Okay, 600 divided by 5, 120. Your impairment loss, all right, that was determined during that year, 5. Okay, and then your statement of financial position, your intangible asset, software. All right, so what's the value of the software now? This is the amount. Okay, the new carrying amount is the recoverable amount. Right? Okay, so what happened on the next accounting year, 31st of December 21? Okay, all right, 31st December 21, you are going to calculate the amortization. Right? How do you calculate the new amortization after that? So you have to take this new carrying amount, which is 235, yeah? Divide by the remaining useful life. So what's the remaining useful life? All right, so 5 minus 3, 2. All right, okay, 5 minus 3, you have been, okay, so divide by 2. So that will be the new amortization expense selepas the impairment. Okay, so 235 divided by 2. 117. Alright, so I just want to share with you, okay, in case ada soalan, alright, requiring you to calculate the new amortization expense after an impairment take place. It's the same concept as how you do your revaluation. How do you calculate amortization after the revaluation? It must be divided by the remaining useful life. Okay, the fair value, in this case the RA, all right, you divide by remaining useful life. Okay, that will be the amortization. Okay, all right, any questions so far? Okay, let's take a look at the answers once again. Okay, I omit A, we go straight to this one. All right, check your own answers. If you have any question, please ask now. So far, any question for part B? I'm wondering if it's the same people who keep on answering me. What about the rest? I can hear the voice is the same people. The rest of you?
So far, no question, madam.
Okay.
So far,
No question, madam.
so far, right?
Okay, madam.
Okay. Look at C. Okay. So, are you okay with IA now?
Yes, madam.
Yes.
Are you okay with IA? All right, you're confident to answer any question on relating to intangible assets? right?
Yes.
Okay, now if you look at all the questions that we have done, okay, they are more or less, they're asking about the same thing, isn't it? All right. Okay, so if you do a lot of questions relating to IA, all right, I think you will have a better idea how to tackle the exam question, the test question, which will be coming soon. All right. Okay, and if you do have any question, you just ask me. Now remember, this is a group, you have to work in a team. Okay, so what you do is, if your team has any question you want to bring up, okay, you just text me and we can arrange for a consultation, yeah, with the group members, right? When we have the consultation, we can have like 1 or 2 groups coming together is fine with me, okay? The more the merrier, all right? Okay, then I will close this, and so since you have no question, yeah, the other one is December 19 and December 18. Okay, let's just, since the solution for this is, I think the solution given to you or not, December, ada tak?
Where, madam? I didn't find it.
Oh, tak ada eh? Okay, never mind, then we will go through December then. Okay. All right, I'm looking at December 19 now. Okay, let's look at the next one. Okay, we discussed one more question. Yeah, December 19. Okay. All right. So in this December 19 question, okay, A, state any 2 examples of contract-based intangible assets. So earlier on, we look at market-based, right? Okay, what are contract-based intangibles? Okay, so these are the ones. Yeah, licensing, service contract, lease, franchise, broadcast, employment contract. Okay. So if you read your textbooks, it's all there. Otherwise, okay, it can be found easily from the internet. Yeah, they do give answers for the different category of intangible assets. Okay, now let's move to B. Bayu Segar is a stupid. Can you see this? If I make it this size, can you see?
Yes.
Okay. Bayu Segar is a company that manufactures and sells candy-coated chocolates in Malaysia. On 1st January 15, they the company acquired a patent. Okay, so you can see here there is an acquired patent, definitely. All right, so when you plan your answer in the test, when you see acquired patent, immediately you put there, okay, intangible. All right, for 2.4 million, okay, this will be the initial cost. Okay, and sell the chocolate for the local market. Okay, Gyanduja chocolate is a European style chocolate made from chocolate and nut paste. Expected economic life is 5 years old. Okay, in the exam, you just identify, okay, this one will be the useful life, so therefore you must provide amortization. Okay, so you tick this and you put the amortization. As at 31st December 16, fair value, the pattern is 1.6. So if you give fair value, then you must look for the subsequent model use. You can see here the company adopts revaluation. So definitely this figure you must take into consideration because you need to fair value your asset on this date. Okay, so that's how you plan your answers. Yeah. On 31st December 17, the fair value of the patent of Bayu Segar was 800,000. Okay, so 2016, 2017. In 2018, there was a company, Synergy Chocolate, manufacture and sell chocolate and caramello, which uses locally produced cocoa powder. In July 18, sufficient evidence was provided by a group of marketing analysts that caramello would give adverse effect to the selling of Wanduja in Malaysia. Okay, adverse effect. All right, that means it's going to affect, okay, the marketing of the sales of this product, yeah, to Bayu Segar. As a result of this effect, Bayu Segar expected that as at 31st December 18, there would be a decline in the value in use. So when you see this word value in use, definitely this is going to be impairment. So you put that this is going to be impairment. You put that impairment, yeah, to remind yourself. And the value, fair value less cost to sell is 250. So this is the RA. The company adopts the valuation model. Okay. So explain the accounting treatment for the patent in 2015 and also 2016. All right, 15 and 16 so far. All right, you will have the recognition of the asset on acquisition. Right, and then you talk about the revaluation. Yes, so let's take a look at the solution here. Okay, so on 1st of January 15, yeah, the patent will be recognized as intangible asset, okay, at the initial cost of 2.4 million. Right, and it would be good, yeah, in the answer here you add on something else. Yeah, why do you recognize as an intangible asset? Okay, so you put there because it meets the recognition criteria of being identifiable, control, future economic benefits, right? Okay, and here you mentioned the cost. Okay, so it's good to put, yeah, because you never know. Like I said, some examiner they will give marks also for the additional explanation as to why you recognize as an asset. Yeah. So just to be on the safe side, yeah, so that you don't miss any of these marks. Okay, next, the patent is amortized for a finite life of 5 years. So on 31st December 15, the amortization expense will be 480. Okay, which will be written off to the SOFR. Right? Then 31st December 15, the carrying amount of the asset is 1920, which is 2.4 minus the accumulated amortization. Okay, the carrying value of the patent on 31st December 16 is 1.44 million. Okay, and the fair value, so this is when we do the evaluation. The fair value of the patent on that date is 1.6. So since the fair value is higher, we need to increase this carrying amount, and that increase is the surplus. Okay, amounting to 160, credited to asset revaluation reserve. Okay, then accumulated amortization of 960, which is this one, yeah, 960, will be eliminated, and the new carrying value of the patent in December 26 is 1.6. which is the fair value. All right. Okay. I think this question was quite similar to one of the questions we discussed earlier on. Yeah. Prepare the statement of profit or loss and the statement of financial position. Okay. So amortization in 2017. What will be the amortization in 2017? All right, so the amortization in 2017, okay, this is 2015, this is 2016, 2017, what happened in 2017? All right, we will calculate the amortization based on the fair value, all right, 1.6, and we divide that by the remaining useful life. Okay, so what is the remaining useful life? All right, from 15 to the date we revalued 2016, so 15, 16, 2 years. So 5 minus 2, that's 3. Okay, all right, 0.6 divided by 3. Okay, so that is the amortization per year. This is how we calculate, all right, the amortization, because after the revaluation, you will take the fair value, you divide by remaining useful life. So that amortization will appear in the statement of 2017. Okay, but also in 2017, you are given the fair value of the asset is 800. So you need to do another evaluation, subsequent evaluation. So again, this question was similar to one of the questions we did this month, right? And that gives rise to a deficit. Okay, a deficit, right? Okay, so what do we do with the deficit? Okay, let's take a look. Right, so we have a fair value. Okay, we have a carrying amount, so there is a deficit of 226,667. Right, so what do we do with this deficit? Now remember, we have a previous surplus. How much was our previous surplus? It was 160. All right. Okay, so in terms of journal entry, how do you do the journal entry? Okay, let me see where I can write. Writer. PDF sign, no, comment. Yeah, pencil. Okay. So what will be the journal entry for this? Okay, this is our subsequent revaluation. Right? How do you account for this deficit? Definitely, you will have to credit your IA with this deficit, which is 266.667. 266,667. Okay? All right. Definitely, you have to credit your IA with this figure. But what should we debit? What should we debit? Should we debit SOPL? Should we debit this amount to SOPL 266,667? Any comment? Is this the correct journal entry for this deficit? Anyone?
ARR.
No, it's not right. Okay, what do we do? What should we debit first?
Debit ARR.
Yes, okay. So I'm going to erase this. Alright. So what you should do is you should debit your ARR first. ARR. Right, so you go back to your previous surplus, okay, which was 160. So use the 160. So you have to use all the 160 because that's all you have surplus. So you still have a balance here. All right, so the balance of your deficit is 106,667. So the balance of your deficit, then you debit that to your SOFL. Okay, so that is the appropriate accounting treatment for subsequent revaluation if your asset is a deficit but previously it has a surplus. So that's why you see now, okay, in your SOFL, you have a deficit of 106,667. Okay, and in your statement of financial position, of course, let me add on. Yeah, something else should appear in your SOFL under your OCI. All right, because remember you reverse your surplus, right? So under your OCI, there will be a reversal of your surplus. Okay, a reversal of your surplus 160. Okay, please add that one, yeah? Please add this information to your answer. All right. So the deficit, of course, deficit is expense, correct? Okay. This is a minus as well. You see, this is a negative. Then you go to your OCI because the surplus was in your OCI. So you have a reversal here, a reduce, a minus as well. Okay. Then when you go to your statement of financial position for that same year, all right, your pattern will now show a value. Okay, this is the fair value, the new fair value. And what happened to your asset revaluation? Your asset revaluation will be 160, okay, minus. All right, so there is no more asset revaluation reserve by end of the year, okay, because that has already been reversed here, okay, ditolak. All right, so you will have okay, so please if you're taking down this answer, right, okay, take a look at the answer, and if you have any question for, especially for part B, okay, please ask me. Part B, okay?
Okay, madam.
Part B should be okay, right?
Okay, madam.
Yeah, let's look at part this one. Perhaps you might have question for this. Okay, so take note, yeah, of the journal entry because they can ask also the journal entry, yeah, instead of an extract of the position, they can ask for the journal entry. And then for the journal entry for software, please take note, okay, if you're preparing statement of profit loss and other comprehensive income, yeah, right, under your OCI, you must show the reversal of your surplus. Okay. No question? Shall we move on?
No, madam.
Sure, madam.
Okay then. Right. Then I shall move on to the next part. Calculate the impairment loss. Okay, calculate the impairment. All right, let's go back to the question. Impairment loss happened on 31st of December 18. Okay, so we will calculate, all right, the carrying amount first. The first thing is you calculate the carrying amount. Okay, so remember just now, we have already revalued the asset previously. So the asset is carried at the fair value, yeah, 800, right? And you continue to amortize that asset, but the amortization will be the fair value divided by remaining useful life, okay, which is 2 years. So we have a carrying amount of 400. Then the second step, okay, to determine the recoverable amount, which is the higher of, right? The higher of fair value and value in use. So the value in use will represent the recoverable amount. Okay. So the third step, we determine the impairment. Okay. Impairment only happens if and only if carrying value is more than recoverable amount. So carrying value is higher by 50. So there is an impairment loss. Okay. All right. So soalan intangible ni dia tak akan lari sangat ya compared to the every semester. Alright, so meaning the more question you look at, the more question you do, the more you become familiar with the how you answer the question. Okay. Alright, any question? Is everyone okay?
Okay, madam.
Okay, madam.
Okay, madam.
Okay, terima kasih ya kepada yang sentiasa menjawab ya dan bertanya. Alright, encourage the rest also ya to do the same. Don't be quiet. Alright, just speak out. Okay, because sometimes when you're quiet, probably you don't know what to ask. Okay, you don't know what to ask. So or you don't know how to ask. But if that's the case, just write it at the chat then. Okay, so far tak ada ya, no question at all. Okay, then the other question, December 18, I think what I do is I leave it to you, okay, to try it out, and you have any question you can ask me. Okay, you can ask me for the solution. You can check the answer with me. All right. So we're gonna take a break because I'm going to move on to the next topic, which is agriculture. All right, so with this, I think we will take, what time is it now? 11:52. So probably you would like to have your lunch. So let me give you about, but then you have your lunch later on. All right, so let's take about 15 minutes before we move on to the next topic. Yes?
Okay, madam.
Sure.
Okay, madam.